Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, January 20th, 2023. It's 1:32 p.m. Eastern Time as I'm starting the video, so we have about another hour and a half left in the trading day. Correction, two and a half hours, I'm sorry. And want to do a quick update on the equity markets and then some of the individual stocks that I've highlighted. And I've highlighted those stocks both as trade ideas. Some of those are actionable, some setups, and then also more so, or at least some of those big, Dow or S&P 500 components and Nasdaq 100 components to keep an eye on to maybe give us some clues about the market. Let's start with the indexes. Oh, and I want to do an update on the VIX. So this is the S&P 500. To kind of recap the most important developments in recent weeks, at least, were the recent tag right here of the primary bear market downtrend line, very well defined downtrend line, and the intersecting 200-day moving averages that come in just below it right there, the red and blue line, 200 exponential and simple moving averages. And so we had a rejection off those once again, as we had in every other instance really since the bear market started, and that's where we're at. So, and to kind of zoom in since then, we had the rejection there off the 200s and trend line, and we made a perfect back test. And so far, and I need to point this out, so far a successful back test of that. Breakout right here. Back test on the first day, rallied into resistance, and then pulled back, and so far we're moving off there. So, if and when we move solidly back into that, what I call the Christmas trading range, that's probably going to bring us down to at least the bottom of the range and quite possibly below. But until, as I like to say, support is support until and unless broken, and the top of that range, I should put a number there now for you, but you guys can see the box. But the number's about 387.10, or yesterday's low was called 387. On to QQQ. QQQ, I made a revision here. I made a note to remind myself when I do the video. I did this earlier today. January 20th, primary downtrend line revision, plus I added a new uptrend line, and let me show you what those are. I can just turn off all the lines here, but let me do that for you. Here's how I've redrawn. Let me look back, make sure I have it correctly. I moved this down ever so slightly, and I'll show you why. It's easier if I turn off all the other annotations on this chart. I still am coming off the highs back here, and what I did is I clipped the top of these candles for a better fit. Remember, intraday, and that's where I had it up here before, it came in before perfectly with the 200 days, and we had a golden short opportunity long exit on that rally into the intersecting 200-day moving averages, the red and blue lines right here, and I had a trend line there as well, drawn at the time, something like that. That's what it was. It came off this reaction high, that little doji stick there, and we hit it, and that was a trend line we were using at the time. And in pre-market, that's where we had that exit. It's not shown on the regular session trades. However, like I said, I've now decided, and you can certainly leave that one there, and that is what I would call, or what I like to call, a BOD, or benefit of the doubt trend line. If you want to leave that one there, no problem, and just have. In fact, I'll probably add it back on because it still comes in with the 200s. In other words, if they pop this one, they still need to pop that one to really have a breakout in QQQ. And of course, if QQQ breaks out, you want to see what S&P 500 is doing at the time. As of now, we're still comfortably below both of those trend lines. And let me turn the lines back on. So that's where I've added it now. And again, I did that because it comes in now and gives you these three distinct reactions with just ever so slightly whipsaw there, and it counts that daily candle. And there, let me put back the one I had before. That's the same one, and we'll just leave that there. And that captures that high right there, which I excluded. So there's the BOD and the regular trend line. And so that trend line is going to come in with price resistance as well, if and when QQQ gets there. Let's not forget price and moving averages are one form of resistance, but there's others out there, such as Fibonacci retracement levels. Again, these were shared in advance back at the time, but I just want to kind of recap what's going on. That's the all-time high, the last end of the last bear market, the beginning of this bear market in the S&P 500. In this purple line right here, I drew it from that high all the way to the recent lows, and you can see these are Fibonacci retracement levels. I also did another fib retracement from this major reaction high down there. That's this white line right here, and you probably can't see it that well in the video, and unfortunately I cannot expand the numbers, but that is, and again, was already pointed out in the past. I'm just kind of recapping here. That was a perfect fib cluster. It has both the 61.8% fib of this move right here, 61.8% retracement there, and that's where we're at right now. I'm showing you, and also the 50% retracement of the entire move. So we already had a little bit higher run. You can see we retraced. These are that last run there in the pre-market session. We had a perfect tag of the 50% on the purple, but I just wanted to mention, because I had this chart up, there's a fib cluster. And speaking of fibs, let me go down to the I want to show you the S&P 500. ES, no, it was RTY. I'll do it on ES. I didn't even think to do it. This is my RTY hourly chart, 60-minute candles. Let me zoom in a little tighter for you. But before I do zoom in a little tighter for you, I already had up here, and you would have seen in the previous charts I posted, resistance / bounce target at 1864.37, and that's that line right there, and that's why the price is highlighted. I put up the fibs today, meaning Fibonacci retracements from the move down this most recent high, that pullback that we just had, and you can see here, and I'll zoom in a little tighter, and you can see it, that 18,464-ish resistance level comes in perfectly. You can't even see the white price line because it's overlapped by the 38.2. That's a key Fibonacci retracement level. So I did want to point out that these small caps here, as of now, have retraced, hit that minimum, what I usually call minimum. There's no, these are the typical ranges. A counter trend rally, if, again, big if, but if this proves to be all that is, counter trend rallies typically run between the 38.2, 50, or 61.8 fib, somewhere in that range, and they usually stop at one of those. And so what I like to do is put up Fibonacci levels after I've already identified the support and resistance levels on a chart. And again, you'd be surprised how often the fibs align with the price resistance and support levels. And there's, like I always say, there's a subset of traders out there that only trade fibs. There's traders that only trade support and resistance levels. Some only trade candlestick patterns. I like to use it all because if some eyes are looking to short the 38.2 fib or the 50% fib, then all the better if it coincides with a price resistance level that others may be. And the way it works too is maybe we don't reverse here. I think we probably will. Today's Friday. It's a weekend. We'll see what happens, into the close. But if they pop that, then you've taken out price support plus the fib, the 38.2 fib, and you'll probably move up to the next one. Really nice price resistance comes in there closer to the 61.8. You have this shelf of support, all these candles right here. But again, just like yesterday, I'm favoring to move down. We went a little higher than I thought we might carry today on QQQ on the 60-minute chart, but I just want to be clear. I'm going to zoom back out. This is my preferred scenario as we head into next week, since today's going to be over soon. Get a sell-off, whether we rally more into the close today or not, come on down and then hit this uptrend line on IWM and then bounce there. That's, I think, the most likely scenario based on the divergences, everything else. Is still, just like yesterday, this looks like a counter trend bounce to me with another leg get down to come, and it's into resistance right now, so that gives you an objective shorting level on RTY. The Russell, that's the Russell 2000, of course. The NASDAQ 100, okay, so let me move this trend line here, get that one out of the way. You can see I've also put up fibs right here, and again, the same thing. I'm looking, this is only the 10-minute chart I got out to you this morning. There's the recent high which was a divergent high. There was a breakdown of the trend lines. There was a drop. So what I did is measured the Fibonacci retracement levels. And again, these price resistance levels I already had on the chart. This is the same chart I got out to you before. Yeah, I haven't touched these price resistance levels, and you can see what I'm talking about. I gave you the 1539 20-ish level right there as a price resistance level, and we certainly did have a reaction at it. We hit it today. You'd have to zoom in a little, but we had a pullback off that level, so that's certainly a reaction. And then look how perfectly it aligns with the 50% retracement level, again, of this move down. We've retraced at that point 50%. We popped that after a little pullback. I have to say that there's still a bid underneath this market, and showing you there people want to own those FANG stocks. I still, at this point in time, we milked the vast majority of that move. They're still about where they were when we hit those price targets the other day, maybe a hair above on some of them. But here's the 61.8 fib, which comes in perfectly with that, or almost perfectly with that 11,583-ish resistance that I had on that chart as well. So another logical stopping point is that's what I'm trying to say here, because we've now retraced 61.8. We retraced 61.8 on the Nasdaq 100 as expected. I told you when went long down here that I thought tech and the small caps would be the two best performing indexes, and that the S&P would underperform. And let's look at that. I didn't even put those fibs up yet, but we can certainly do it. And I like to do it. I do it on the indexes as well. The ETFs that track the indexes. Sometimes you get different numbers, sometimes the same. But remember that these are the Globex futures. They trade around the clock, so you sometimes have higher lows and lower highs, or higher highs, different reaction points. So I'm trying to dig up the ES chart for you, and then we'll put up the fibs. There it is. Okay, so. This is it right here. Textbook, bearish rising wedge on ES right there. Textbook impulsive move on the breakdown and the BOD, benefit of the doubt, 39.96 support level taken out. Gave us that move down. Now let's put up some fibs. I still think we're going to do this right here. Next week, come down and test this trend line. That would give you an objective area, if so, to cover shorts, and maybe reverse long for a bounce trade. Let's pull it in a little tighter and see what the fibs look like. This program, you start from the lows, you go up. Others, you start from the high and go down. So I'm going to pull that there. Go up to that recent high. That's actually the high right there. And here we are. We're just above. You can see we've been stalling around this 34 or 45-ish resistance throughout most of the day, and the 38.2. We're slightly above the 38.2. The 60-minute candle is still forming right now. It won't be finalized until 2 p.m. in another 15 minutes. But point being, and what I wanted to illustrate to you is, remember the Nasdaq had retraced 61.8% of its move down, whereas as expected the Dow has underperformed and only retraced 38. And so that's what I'm watching, and still at least watching for, and still think we're probably going to see, is certain of the old leaders rolling over now, the stocks that have held up in this bear market so far. And on that segues me into the updates here. So I'm going to show some of the Dow components that I highlighted in the last couple of days for you, and those are the ones that need to trigger the next sell signal to increase the odds that we're going to see the S&P and the broader market roll over, and again some of those stocks that have held up so far. Now remember, again, as I like to say, support is support unless broken. So we had the breakdown of the trend line in Merck, a breakdown backtest, but it's still holding the big level that I told you yesterday it needs to take out, and take out with conviction, 108.73. That means a solid daily close, red candle down through there. As of now, it's holding support. So this will be to be continued next week, based on the the look of this chart. I think it's going to come, but until we get that, until Merck starts heading down, Merck will weigh pretty heavy. It's one of the big ones in the healthcare sector, and that also in the Dow and the S&P. So we'll watch that one. No sell signal there yet. Very close. Walmart, same story. WMT, very important one. Again, I covered all these in more detail yesterday. I'm just going to update that this stock looks like this morning, see again, this is why you want to wait for these daily closes. This morning you pop below the trend line, and this is why you also want to wait for the BOD levels. I listed yesterday, I believe, the BOD, or benefit of the doubt, support level at 138.25. We hit it to the button and bounced. So far no sell signal, but it's looking weak. It's in a very precarious situation. It's at trend line support. Now, those folks who are glass half full, meaning bullish, you buy here. This is technical analysis or trading 101. You buy support, right? You buy pullbacks to support, and you do that with a stop somewhat below. Like I said, I'm not buying Merck right now. It doesn't mean it's not going to go up, but I'm waiting to see a breakdown and expecting one in order to kind of firm up the bearish case and add to my shorts. Not necessarily just I said Merck. Not this is Walmart. Not necessarily only on Walmart, but again, the more of those stocks that break down, the better. So I just want to point out that those two so far are flirting right there on the line, and wouldn't be surprised to see them break down next week. Lilly has broken down today. Here's Eli Lilly. There's your primary uptrend line off the lows, another stock that has defied or never got the memo that we were in a bear market. The healthcare and the pharmaceuticals were doing their own thing, and we do have a red candle today. Personally, I'd hold off right now, because what I can do, see this little candle here? I don't know if you can see it. I could drag this line down and make that, put the trend line on the bottom of that one, BOD. I had it this way because you came in kind of closer to these lows. I always say trend line drawing is an art, not a science, and based on the fact that many other Dow components are right now at support and haven't broken it yet, you got to give the benefit of the doubt to the current trend. And remember what I said before, we've seen at least in recent weeks the stock market stabilize. We've seen that shift in the supply demand dynamics. We had that basing pattern, and we broke out. Yes, we had a little pullback yesterday, but as I always say, the stock market is inherently bullish. The vast majority of market participants, meaning individual investors, hedge fund managers, mutual fund managers, pension fund managers, anybody that manage, they're long only and bullish only. Most of the time, and stocks go up. That's why. So short sellers, we're kind of a niche crowd, and so we have to be very careful, knowing that unless there's some strong forces against the market or particular stock, the tendencies to go up. So that's why I'm going over all these and showing you we're getting some check boxes, but there's still a few, especially these big names like I just showed you, Merck and Walmart, that we need to see break down to help firm up the bearish case. Cisco, this is back testing that line I gave you, this little trend line, and holding that 46.19 support. In fact, buyer stepped in so far. It hit it today, had a slight undercut, and it's rallied above it. So this one's still at support. No check mark there for the bearish case yet. BA cracking, but again, this is not, see, as I move the line here, like I said, you need to, unless the evidence is strong to be short, give it the benefit of the doubt. You don't want to, that's not a breakdown in my opinion. If I look at it this way, it looks like the candle's a little below. I roll it this way, then it's right on, or actually right above it. So close, but no cigar. And again, this is a stock at support. You could buy here. Why aren't I buying it? Well, because this divergence and everything else I see in the chart tells me that it's likely to break down soon, and I would rather let it run up, even if it takes a while, and wait for a sell signal. In other words, the risk reward is just not favorable. Yeah, it's in an uptrend. People like to buy stocks in an uptrend, and that's what you can do on pullbacks to support. But the upside is limited, in my opinion, compared to the downside potential. So no sell signal yet, and that's why I'm doing this. So we're still probably going to head into the weekend with a lot of these stocks still waiting, pending some sell signals to help firm up the case for a leg down in the broad market, the broad major indices, the Dow and the S&P 500. Home Depot, same story. This is that level I told you yesterday, 310.65. Undercut it, and again, that's when you see that even on a daily basis, that has the potential to be bullish. Those that don't wait for confirmation or want to look, and sometimes I will take an early breakdown if I think it's going to stick. Not that I took this one, but if you shorted, then you realize that the breakdown didn't materialize, at least as of right now. We're at 312.56. That support level is around 310.65. So those short sellers have to cover, or may want to cover. It depends. Again, I don't know. Everyone's stops can be somewhere else. But the bottom line is there's no sell signal, at least not on the daily chart. It's normal to see an intraday break, and so that's one we'll watch and see what happens next week. The others, we had a lot of interest in Ford on the site lately, so I covered that. And so far, still, got rejected here off the primary downtrend line. Still has that big divergent low, and this is what we have to watch. You got some quite a few stocks that did recently put in divergent lows. The last time Ford put in a divergent low on the daily time frame was right here, and it gave us that. And then it put in a divergent high right there, and it gave us that. So boom, 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 boom. But now, if you get divergent low and a breakout of the trend line, and especially that 1350 level, that's going to be pretty bullish. But as of now, it's in a downtrend below trend, making at least equal lows there. And again, I don't have an opinion right now on that. If it pops that bullish, if it gets rejected and comes down, undercuts the lows, especially if it takes out the divergence, that's going to be bearish. So we haven't done either yet. And then Disney, I think I'd give you an update on Disney. Disney actually had consolidated on my first target. Remember, that was 99.50. Gave this one to you here. Had a breakout of the downtrend line, and it's making a run now at the secondary or larger, more significant downtrend line, and the 200 days just above. So the upside is limited. So get ready if you didn't take profits there. We're probably going to have see Disney stall out here, most likely around that downtrend line, price resistance and or the 200s, and then you have a reaction high there about 109 and change. The other ones I highlighted recently, I gave you, I'm just going to rifle through the scratch pad from last week or earlier this week. KLAC, still no sell signal, divergent high. And this is one of the canaries in the coal mine for the semi sector. KLAC and AMAT, Applied Materials, they make the equipment that makes computer chips. They're the computer chip equipment makers. So they're usually the first to roll over when orders start to slow. So as of now, it's still in an uptrend. It's at support. But again, with the negative divergences, this is where I don't buy that pullback to support. I might buy others in here, but that one I just wait patiently for break of this trend line. And if I don't already have it, I set a price alert to remind me when that goes. But again, I covered that one recently, as I did O'Reilly. That one broke down. That was a short setup, broke down, moving lower after the divergent high. Coming up on that first target if you took it, 781. Getting very close now, not there yet. Airbnb, is there any change in that since I covered it the other day? No, still at that first target. That was a breakout there, 100 and about 101. Consolidating, maybe flagging, maybe wants another thrust up. I think if the market goes up, and again, this is one of the more bullish charts. I told you yesterday, this is very much a stock picker's market, and that's why I'm going over these. I'm giving you bearish setups, bullish setups, and if you're getting whipped around and the indexes are not doing so well there, then you might consider trading the most bullish stocks in the S&P or NASDAQ, and or shorting against shorting the most bearish stocks. So then you have a hedge portfolio, but not a direct hedge. I'm not a big fan of going long SPY and then buying SPY puts. The costs on the SPY puts, if it's protection, it's dragging down my returns. If I like to stay away from a trade if I can't make a clearly bullish or bearish case. But I do like hedging, but I prefer indirect hedges. So in other words, you can go, instead of going long or short SPY and then buying puts or calls against it to protect your downside, just go long the most bullish stocks in the S&P and short the most bearish, and you should outperform it. If your stock picking skills are good. Airbnb, that was that one. KHC, do I need an update there? Oh yeah, there was one shared there. I pointed out yesterday it had a little consolidation. I said perfectly normal, nothing goes straight down. Another leg down, very close to that 3908-ish target already. So get ready to cover that if you didn't already. You could have certainly covered it at today's lows or on around there, because I always say cover a little bit above actual support. I think it'll probably continue down next week. You'll get an exit closer to that 39 level. But again, heading into a weekend, these are factors that go into my trading. If had I taken this one, I would have most likely had a stop loss order a little bit above there this morning, or even if I had it below that and I saw that drop, I probably would have just lowered stops tightly. That's what I'll do often, very tight. So if it's going to continue to fall, my target gets hit, but then I have a OCO, one cancels the other, stop loss order above. In other words, with a weekend coming up, when I have something that, especially if it played out very quickly, take the money and run. Why risk a, gap up or something like that, another kickback? Because if it does kick back, it's probably going to want to test that 48.50 level, 40.50 level. But yeah, anyway, I wanted to just point out, because this was one of those Dow components, S&P, steady Eddie, stocks, defensive stocks that has been falling. ENPH didn't load. ENPH. This one was highlighted, I believe, recently as a break below that trend line. I know it was on my list, so I would have highlighted it again a week or earlier this week or last week. And I just want to point out it has now hit that 217.96. I'm going to round it off as I should. I put the lines up there. Call it 218, so that's effectively a hit of that target. And this one, it looks like I'm sharing this as a bounce trade idea. If you look down here, let me grab the circle tool. You have some small but positive divergence there. You have a lower low in price and higher lows in the indicators. That'll probably show through better on a 60-minute chart. So if it looks small on the daily, just go to a 60-minute and there's your divergent low. So there's a case to be made to step in and buy this one here just above that 218 support. It's really good support. I'd be surprised if the buyers don't step in for at least a bounce trade. I moved that line, didn't mean to. Go back here, edit 218, just put it back to where it was. 218, there we go. Where to? I don't know. The point was just to show you it was there. Probably come back. Just put a stop under it, let it run. I'd say maybe target a little shy of that previous reaction high at least. Divergent low on the daily in 60s has the potential to let this run for a few weeks, especially if the market holds up. And this is in the solar sector. But again, that's just a follow-up to a recently highlighted trade. Marvel, I don't think there's any update there to be made. Nope. CRM. Oh yeah, this one definitely an update. Salesforce I shared as a bullish setup, pending a break of the trend line and the BOD level. I have a resistance zone, and it's just starting to go. I have to say this. Unfortunately, it's Friday. Me personally, I usually won't take, not always, but I'll typically pass. It's at 151 now, so it is above that level. And you could see, and it's clearing this recent trading range right here. If I box it in, let me grab my box tool frame. So you can see it's starting to break out, but getting a little too close to the close for me. It's a break. If it closes solidly above there, it's a breakout, and then it'll probably gap up or run up next week. Same first target, 166.55. But again, yeah, that's just me. I'd pass for now. See how things shape up next week. Yeah, that's really it. I just wanted to do those updates there, show you the good, the bad, the ugly. The S&P, same thing, just like I showed you on ES and RTY and the small caps. This was a initial leg down followed by a kickback rally, and most likely it's going to end up, most things tend to work in waves. It's possible that you get straight up from here, but this is what I'm favoring. It's come on down next week, hit those trend lines, probably dump into the close. My guess, some profit taking. Could go the other way. Sometimes, again, if there's a lot more, maybe this is short covering going on. Maybe there's people that want to get long before the weekend, but that's still my preferred scenario. Really no change since yesterday. The SPY is up, market's up a little over 1%. And a lot of that is, we did get that dump into the close yesterday, especially in QQQ. That was shown right here. This is a 5-minute chart. There was that late session dump, and we just resumed the uptrend, but we're still like I said, and we are a little bit above that, quite a bit, not much, but above that 277.83 level. I pointed that as an objective short level. We're about 1%, so really not much above that. And if you look right here, here, all these levels, that was the bottom of this kind of trading range. Special was more defined, well defined on the bottom. Bring that line across, you have a reaction high there, and that's right where we are now. So yeah, yeah, I'm not crazy about the punch above 277.83, but it's only 1% above. So, and that's where I mentioned, today have an objective short. So it all again, it depends on what you're going for. If you think we can come on back here, which I think is certainly possible, a pretty good, decent chance of doing it, back test at either 270 or 267 level. Well, if you shorted 277.83 and it drops, 4%. You give yourself easily a 1%, even a 2% stop loss, and that's a favorable RR, risk reward ratio. And then to end the video and get down a little bit micro, going down to a 5-minute chart. This is a very active trading time frame for nimble traders. If I like to look for these either bigger or even small divergent highs. This is potential. If we keep going up, the divergences will be burned through. But right now we have that negative divergence on the SPY 5-minute chart, and that could certainly play back for a little fade into the in the final hour or so of trading today. That's ES, the S&P 500 futures, and then you have something similar on the NASDAQ as well. And that's NQ. That's not the NQ board I want. I want this one here, and I'll draw it for you. There's the again, potential divergence. We need to reverse soon, because if we don't, we make higher highs in these indicators. So if you get a reversal here, and you can trade very actively, maybe even look for some type of bearish reversal candlestick pattern on the 1-minute chart or even the 5-minute time frame, and that could be your short entry for a fade into the close. Or just hold on if you're swing shorting, and roll the dice into next weekend. But like I said, swing traders always have to know, and even futures traders know, that you have that extra overnight risk, 2 days of overnight risk on the weekend. So something to consider. And one thing this market is known for lately is a lot of gaps and big moves in either direction. So, oh, sorry guys, one thing I wanted to do in the beginning is cover the VIX, and then I'll wrap up. Remember, this is the VIX daily chart, the VIX volatility index. Here's an uptrend line off the mid 2021 lows that comes in where we just reversed to, and when we pull back to that trend line, which is also price resistance, it's contained throughout 2022 since the bear market started. All pullbacks have been contained at that level. That's where it's taken us back to. So you have a pullback to support in the VIX with positive divergence, and we've already started to move off there. The divergence, would help to see a little more upside to put two clean troughs in that PPO down there, so to give us the divergence. But again, something that I favor. You can see the PPO if you look closely turning up. It hasn't yet made a bullish crossover. When it makes a bullish crossover, the histogram will go green, and then you'll have what I call at least confirmed divergence. And so something to watch for next week, and that would coincide almost certainly, or very most likely, with a breakout or a correction in the stock market. In fact, here's the level to watch. I'm going to pull this one off. No, I'm going to leave that line on. These are the levels to watch right now, what I just drew. Downtrend line off the high. You have a lot of nice reactions there besides the high one there, a couple down there, and then it gives us the positive divergence below, gives us this wedge type pattern. And we may want to wedge down in a little more, so we can drop. Next support's about 1673. However, with the posture of the PPO, it looks like we'll probably get a curl up next week, and that would coincide with a drop in the market. And if this breaks out, well, we'll take it one day at a time, but just don't underestimate, especially in a bear market. When you get these bear market rallies, everything looks good. The media will start coming out, marching out the bulls that tell you the bear market's over. And at one point it will be, but be very careful, because bear market rallies are like the sirens to the old sailors in the old days that are calling them into the water to their deaths, where they'll lull the bulls back into a feeling of safety and think the market's going to rally, and all of a sudden, if you get this move up in the VIX, that's what happened here. That's what happened here, and it can happen very fast. Once the VIX started running, this is just 3 days right there, 4 days, and the VIX went up about a week, went up about 82% here. Broke out, kind of floundered around, but it took off from this point right here, and that was about a 53% return. This one. So these were all the big drops that we had, the sharp legs down in the stock market. And that's all I'm trying to say. I don't know if it's coming next week or not. I just know the posture right now, the risk of it happening is a lot higher, and has been really since we broke out of this trend line. So those are things to watch for, and I think I'll also do that, set an alert there. Okay, guys, it's pretty comprehensive coverage on the equity markets, what to watch for, watch some of those key stocks. No change. I'm looking at my across the board, gold, natural gas, crude. I don't see really anything else worth updating much right now. So I'm going to wrap it up here. This has been Randy Finney with Red Side of the Chart. Have a great weekend.